Who's going to comment on this momentous day? A full screen. Look at them. We have Liz McDonald, Liz Peek, Shah Gilani, Nicole Petalidis from the New York Exchange, and I believe I see there Todd Horowitz right there in Chicago. Let's go round the block. First of all, to you, Shah Gilani. We hit 22,000. Where to from here for the Dow?
Sky's the limit. There's no reason for this market not to go higher. There's really no impediments. There's no headwinds. Earnings are fantastic. 70% of the S&P companies have beaten expectations. Revenue growth is fabulous. Profitability is fabulous. All the big companies, the leadership stocks are all doing well. So there's no reason for this market to do anything but go higher.
Okay, and by the way, with Apple as a Dow stock, the gain in that one Dow stock is equivalent to a gain of 60 points on the Dow Industrial. So it is indeed Apple that's pushed us over the 22,000 mark. Liz Peek, where to from here for the Dow?
Well, I agree with Shah. I mean, as long as earnings continue to go up, we've had two back-to-back quarters of double-digit profit growth by U.S. corporations. That's extremely bullish. And, you know, look, the backstop obviously is the Trump agenda. If we see any movement on tax reform, that would be further fuel to the fire. Okay,
Todd Horowitz, come on in, please. I believe that long-term, you're bearish on this market, but tell me short-term, where's the Dow going, short-term?
Good morning, Stuart. I think that we might have seen the high this morning. I think that I'm actually bullish long-term. I'm bearish short-term. I think that the markets, I think there's too much debt in the system. I think that we're seeing more contraction in companies that are buying back their stock instead of employing people. And I do agree with Liz Peek on her Amazon call.
Okay, we got it. We are now at 22,010. That's a 47-point gain. And by the way, Apple contributes 60 points for the Dow. So if it wasn't for Apple, we'd actually be below 22,000. Let's now look. Apple has put up some very strong numbers, and that's the resulting stock price, $159.23. That is a $9 gain. So let's talk just simply about Apple. Shah Gilani, where is Apple going from here?
Again, there is really no ceiling. This is another record high for Apple. Revenues were up 7%, profits were up 12%, and you know this is two consecutive quarters in a row where profits are up. This is on the heels of a year-long slide where people were concerned about Apple's profitability in the future. It just hit it out of the park. The iPad sales were out of the park at 15% gain. That's the best they've had in 14 quarters. So spectacular gains there. The iPhones themselves, you know, 41 million, and this is all on the heels of what's about to come, which is the iPhone 8. So this is a great setup.
One concern, the sales in Greater China down year over year by 9.5%. Apple doesn't like that. Apple, though, Tim Cook was talking about cars and robot cars. He said it's automation. We're pushing on software and automation. Apple services, the services part of the business, the sales there are bigger than Facebook, bigger than Capital One, bigger than Travelers. So even just the services component, $27 billion, is big.
That is huge.
And by the way, it's the talk about cars that gets Tesla into the mix in terms of a possible acquisition for Apple. But the other thing I think that's interesting is it all hinges on the next iPhone. I mean, let's face it. That's why they boosted the iPad sales in this quarter. It's all heading towards this rollout. It better be good.
I'm on Tesla. You see it on your screens. It's down, just a $1.92, but it is down. Here's the story. Hedge fund manager David Einhorn, very powerful guy on Wall Street, David Einhorn. He says Tesla could run out of cash making the Model 3. That's what you're referring to, isn't it?
Well, what's interesting, because that would be a pretty happy marriage, right? If they need cash, guess who has cash? It's Apple. But Tesla is booting up its car production. Huge percentage gains, huge number of increase in terms of output of cars. And what Einhorn is talking about is they may not have the cash to fund that, and he's saying, well, you know, someone's going to have to do it. Guess what? Wall Street has been very accommodating to Tesla. I think they will continue to do that because it is viewed as a sort of visionary, futuristic stock. It's never traded on current earnings or current cash.
Apple could give them all the money they need.
Totally. That's what I'm saying. It's a great combo. Todd